Good morning, everybody. Hey, thanks for joining us today. Today is Tuesday, August 20th. Yesterday was quite the day on Wall Street, made kind of a bounce back, continuing Friday's move upward. Still in downtown Chicago at my training, and Dave will be with us in just a few moments. We'll talk about a few earnings and a few things coming up.
38 before 9. And we always check in on your money this time of the morning to find out what the world is doing to your 401k and your IRA up on Wall Street. And for the last week or so, it's been kind of a mixture of really good and really bad. And the bad's kind of outweighed the good so far, but it's been a recovery for a couple of days. We're going up to Chicago at the moment to visit with Phillip Statler from Statler Financial Services. Even the pros need continuing education, and Phillip's been getting it. How are you this morning, sir?
Hey, I'm doing good today, Dave. It's I had a first day of meetings, and it's always good to sit down with a small group of advisors and just kind of share what's working and how we can help our clients out there better than what we're doing right now. And so it's always a good time to get up here and just get away and kind of get in there with some other advisors that have been doing this a long time too.
Understood. That's something you and I think have said off the air and maybe on. Financial management tends toward being more art than science, and the more different styles of artwork you can look at, the better your toolbox to be able to advise your clients, right?
Exactly. Yeah, it just really helps to figure out what other people are doing and how they're meeting their clients' needs better than what I am, so that we can all get better.
Yep, kind of comes under the heading of the longer I live, the less I know for sure, and the more different points of view one hears, the better one gets being able to refine their own point of view, right?
That's right, exactly.
All right. Hey, setting up the table for this morning, it was an up day on Wall Street yesterday. It was kind of party time, as a matter of fact. Dow was up by almost 250 points. NASDAQ was up by 107. Standard & Poor's was up by about 35. That's a couple of pretty good days in a row, and most of the credit that I was getting from it indicated it was just financial moves from overseas that did it. China backdoored an interest rate decrease. They don't do it with their Federal Reserve equivalent. They do it with a prime rate adjustment, but their big bank dropped the prime rate, and that's supposed to be a hint to all the other banks in China that the government wants the interest rates dropped. Put that together with Germany and the other European countries talking about stimulus. I guess we've just got more confidence in our trading partners.
Well, I think we've got that, and just the fact that this thing has gone on so long, and we took such a big bath last week, Dave, that I think we probably just hit a floor somewhere in there, and it's time to bounce off that floor a little bit.
Well, you know, when we had that big bounce back up last week after the 700, didn't we?
I'm sorry, Dave. You dropped out, and I didn't hear it.
We're both kind of surmising that there was a support level down there somewhere. Nobody knew where it was, but it was a pretty resounding bounce off the support level, wasn't it?
It was a good bounce, so Friday was good, and then we got a continuation yesterday. We've kind of had mixed results today. When I got up, it was up. A little later, it was down, and now it was back up. So we're still seeing a little bit of volatility in the futures.
It sounds that way. Some of it is some conflicting trade news that we got with China. That big cell phone company, Huawei, is one of the targets that we've had for a long time. Yesterday, we did two things, and which one actually affected the markets? It looks to me like the latter did. We first of all added 45 more companies onto the list of companies that were on the blacklist for trading with Huawei, the big manufacturer of cell phones over there. Then we turned around and put a 90-day reprieve on doing business with Huawei, which kind of gave folks hope that maybe something's moving in our talks with China, and that looks like the cause of a lot of the optimism yesterday.
Well, hey, anything that's coming out of China that's good news is going to help drive the markets. We continue to just hope that this thing ends shortly as we continue to deal with kind of the unknown. I mean, yeah, they say we're going to have these tariffs out there, but then they keep moving that bar down the road a little bit on some items. And so we just don't know. And the markets don't like the unknowns. So anytime they hear some good news, it kind of is a pick me up.
Which is kind of why we've got a fair chunk of growth to go before we get back into record territory, even after a couple of relatively good days. It's a relatively slow news week this week, in part because everybody's going to be on hold to a certain extent to see what all the movers and shakers do over in Jackson Hole as the Federal Reserve calls in all their heavy friends to have a conference behind closed doors. And we haven't had any great leaks coming out of there yet. That meeting starts on Thursday in Jackson Hole, Wyoming. A couple of business news reports that came out. One of them, we actually had some good news out of a brick and mortar retail. Kohl's actually beat the street.
Yeah, they did. They came in 2 cents ahead of estimates. Their revenue was a little below forecast, and their comparable same-store sales missed too. They declined 2.9%. And they're expecting only to decline 2.5%. So not good news there on the same store front, but they're liking it because they're up about 2.9% this morning after being up almost 6% yesterday.
I was going to say they were up a little bit more than that earlier this morning. It sounds like the bloom is off the rose a little bit, but some of that has got to be just party time because we've had so little good news out of brick and mortar retailers this earnings season.
Well, I think that's true. And then we follow through with another brick and mortar, which is retail plus construction type of thing, and that's Home Depot. Home Depot came in and they beat by 9 cents a share on earnings. They missed a little bit in the revenue section, which when you actually look at their situation, they have a lot of commodity stuff, lumber and stuff like that. They don't necessarily control the pricing. And so the lumber prices have actually come down a little bit. And that in itself could help could hurt the gross revenue number when we look at sales. Same store sales missed a little bit. They came in at 3%, which was a little bit below the 3.5% they were expecting, Dave.
Okay. I know they also had issued a warning saying that those variabilities on lumber prices could make a difference. They also said that the tariff situation and the fluid picture there could mess with their outlook, but they still are showing green ink this morning in pre-market trading, even with a not necessarily 100% positive report.
Yeah, they are. They're up about 2.5% this morning after being up about 2.1% yesterday.
Understood. You had one more, I know, and I think it's the one that's at the top of my big winner list, the Medtronics people.
I did. I had Medtronics. They beat by 8 cents a share. Revenue topped the forecast, and they raised their full-year guidance, which is always a good sign. And they're up almost 4.5% this morning.
That's good news, and we're looking at green ink from yesterday and maybe a little bit more today off of actually some positive reports for a change on earnings season. 45 minutes before we open this morning, Phillip, after a resoundingly good day yesterday, can we keep the momentum going this morning? How are we doing?
Hey, it looks like it right now, Dave. We got the Dow up $42. We got the S&P 500 up $4.25, and we got the NASDAQ up a little over 15. So some good signs there. We look at, see here, interest rates are still ticking down just a little bit this morning. The 10 years down 1.56. And then we've got oil heading down too. It's at $56.14 a barrel right now, Dave.
All righty. At overseas markets, we got mixed pictures overall. Asian Rim, for the most part, up, but Hong Kong was off fractionally when they closed early this morning, our time. European markets, again, mixed this morning halfway through their trading day. Phillip, you're not in town today, but I know the office is open. How does somebody get a hold of you to make an appointment for some unbiased and updated education advice on making retirement work for me and my family?
They can give us a call at 863-382-0037 to schedule time for their financial x-ray analysis of their current portfolio. I think it's vitally important as people get closer and closer to retirement, or they're already retired, that they go through that process to really find out where they are in the whole retirement deal. And then we've got our Statler Financial radio show every weekend. Saturday it's at 6 a.m. and noon. Sundays at 10 a.m. on News Talk 7:30 a.m.
All righty, and back here tomorrow morning on Light FM. Phillip, thank you so much. You have a good day for the rest of the day, and we'll catch you in the morning, all right?
All right. Thanks, Dave. You have a great one.
You too, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.